questions were really just around what can I do to protect what I have. So the mindset shifted from trying to build on what they have to protect what they have. And I think I was offering advice in July and August that was very, very different from end of 2019. And what I was essentially telling people was, given the complete lack of clarity about the extent of this emergency situation, you need as much cash as possible.
What's going on, everybody? So today I want to talk to you about Wealth Tender. If you are a finance content creator, whether that's a blog, a podcast, you're a financial advisor or a financial coach, I highly recommend you check out Wealth Tender. Wealth Tender is building a database of all the top finance blogs, podcasts, and the financial advisors and financial coaches that they have on there are vetted and top-notch. So we actually had the pleasure of hosting Brian Thorpe, the CEO and founder of Wealth Tender, on Average Joe Finance's podcast, episode 25. Go check out that episode, listen to his story, and listen to him talk about the database that he's building. It's really phenomenal stuff. So if you're interested in checking out the directory, or if you're a finance content creator and you're interested in joining up with the directory, go to the link below in the show notes, or check out www.averagejoefinances.com/wealthtender. If you're watching this on YouTube, make sure you smash that like button and click subscribe. For those of you listening on a podcast platform, be sure to subscribe on whatever platform that is and leave us a rating if you can. The more likes, ratings, and subscriptions that we get, the more we can spread the message and grow our community. So we also have a free Facebook group. It's called the Average Joe Finances Network. Check us out, join the group, join the community, ask questions, and become a part of the team. All of our other social media accounts are listed in our flow page, and we have them in the video or podcast description below. All right. Hey, how's it going, Average Joe? So today I have on with us Simon Brady. Simon is originally from London and has spent over 25 years in an institutional currency and equity derivatives trading environment, both in the financial district of London and on Wall Street. He began his certified financial planner education in 2010 at New York University and earned his CFP designation. So Simon has worked at the United Nations as a financial advisor for a while, and in 2016 registered his own independent firm, Anglia Advisors. And once he started that up, he provided full-time, fee-only personal finance consulting and investment management services. His practice focuses on three main demographics: individuals, couples, and families aged in their 20s, 30s, and early 40s. The next category is aged 50 and under, suddenly single individuals coming out of a recent divorce or premature, unexpected widowhood. And the final category is aged 50 and under, foreign national individuals, couples, or families living and working in the United States on visas or green cards. So, hey, Simon, what a background. Happy to have you on the show. Thanks for coming on today.
Thank you for having me, Mike. I appreciate it.
All right, Simon. So again, like I told you before, I like to have these interviews as if it was just two regular guys just sitting down, having a cup of coffee or a cup of tea and just hanging out and having a conversation. So with that being said, I'd like to know if you could share a little bit about yourself and share your story with our audience.
Sure. I basically came to the United States, as I mentioned, 25, 30 years ago. I was sent over by my employer at the time. We were brokers. We were trading currencies and equities. It was screaming, shouting, just like in the movies and everything else. And then 2008 came along, and that pretty much destroyed the business model as it was at the time. And I was getting relatively frustrated with that life anyway. So I went and got myself certified as a CFP, Certified Financial Planner. As you mentioned, I went to work for the UN for a little while. In the end, I decided in 2016 that I was going to set up my own firm and focus on those demographics that you mentioned, primarily because they're underserved demographics. The typical financial planner likes to work with people who are older, who have had time in their lives to build up more money for them to manage, who are concerned about distribution of wealth rather than accumulation of wealth. And I just found that that group of people, particularly in that sort of 20 to 40 age bracket, are disregarded by the financial services industry. And I'm in New York. I'm in a very competitive market. And why would I go up against 1,000 other financial planners here? I might as well find an underserved market and work on it. So I got myself familiar with the issues that face foreign nationals. I got myself familiar with the kind of situations that people get into just post-divorce, and have tried to focus on those people and offer help to the people. And the only other thing I would say is that the structure in which I work was very deliberately set up to be fee only. So I work on primarily on an hourly basis with people. I don't sell any products. If I make a recommendation, it's not because I'm being paid a commission to get a particular investment or product or policy sold. I don't sell insurance. I don't do people's taxes. I've tried to strip myself of as many of the conflicts of interest as I can.
So actually, I want to talk about something real quick about you being a fee only financial advisor. So what is the difference between somebody who's going to do fee only or like how is it different for somebody who wants to go to a financial planner and pay fee only versus someone who's commission based?
So I will work with people. Essentially, it resembles a project. So we'll sit down, we'll talk about what they want to accomplish, and I will essentially work on that with them and build them on an hourly basis for the work that I do. The big difference is that my only source of compensation for an engagement is directly from the client. I'm not paid by anyone else. I'm not paid by the mutual fund company to promote the mutual funds. I'm not paid by the insurance company to sell them insurance. So because 100% of my compensation comes from the client, 100% of my obligation is to the client. That's the primary difference. I also have a legal obligation to act in their best interest at all times, which is something commission-based advisors do not have, as I'm sure you're aware. So I've deliberately set up the company in such a way that I have that legal obligation, and I have cut off all sources of income to me other than what the client pays in fees. So that's where obviously the fee only comes from. 90% of advisors, I think, are commission based. I think that's the latest statistic I saw. So there is only a relatively limited number of fee only advisors out there.
Like you said, you threw yourself into such a big pool of, out there in Manhattan with other financial planners out there, and the competition's got to be pretty tough. So that's one way to kind of change it up a bit to make yourself a little bit more competitive, especially with there not being too many non-commission based financial planners out there. I think this kind of helps us segue a bit into the next thing, right? Because I'm talking about with you being fee only and non-commission based, kind of stepping up against the competition that you have out there in your particular market. The other thing you have is those three specific demographics that we talked about both in your intro and that you explained a little bit about. Did you focus that on those demographics to kind of narrow down the market and give yourself more of a target market that maybe other people aren't really targeting?
Yeah, I mean, that's a good question, because I can look back now 5 years ago, 4 or 5 years ago, and say, oh yeah, I deliberately did this. I set this up. In the truth of the matter is, it's a little more. It evolves a little bit by itself. But generally speaking, yes, I think trying to be a financial planner to everybody, particularly in a crowded market like New York City, trying to be everything to everyone is relatively futile. I'd rather be known among the community of foreign nationals who live in New York as the guy to go to for their financial planning. I think it makes referrals much easier for clients to do when you're working within a relatively small framework or a relatively small niche. So yeah, I'd love to say it was a master plan that I figured out in 2016. The truth is, it's kind of ended up this way, but I'm far more comfortable with this. to become, something, a concentrated knowledge base in a smaller area is of far more value to clients than being a master of IRAs. I mean, all financial planners should be able to do that. But this is something more specific, and I think it does work. And the fact that 90% of my business comes from referrals probably justifies that.
Yeah, you mentioned something about near the end there about, how every financial planner should be great with running IRAs, right? And just about every single one you go to is going to, that's a product that gets offered. But is there, do you do anything else with your clients beyond just their initial investment strategy?
Yes, and that's a very important part of working with the groups of people that I do. When you do the CFP or Certified Financial Planner education course to get the designation, you are working on estate planning, you're working on insurance, you're working to an extent on taxes, although we can't give tax advice. So I will work with clients on all of those issues. Estate planning is particularly important. For instance, if you're a foreign national living in the US, you're not treated by the authorities in the same way that an American would be when it comes to estate planning. I work with clients on debt management. And if I'm dealing with clients aged between 20 and 40, you can imagine most of them have got pretty significant debt, a lot of it from student loans, but some of it from credit cards. So I deal with debt management. Insurance. I don't sell insurance, but sometimes I will see an insurance need. I will talk to clients about whether they need insurance. I'll talk to clients about, I find a number of clients are over-insured, which is not what the insurance industry will tell you, but it actually is the case. And I'll work with them on their insurance needs. So if you're dealing with couples in their, a couple in their late 20s, buying their first apartment, having their first kid, everything's in motion, right? College planning arrives on the horizon. Estate planning is now not optional anymore. Once you have a child, it's absolutely mandatory. You may not have needed life insurance before that, but you probably need it once the kids come along. And when it's with dealing with the divorcing people, you have, again, everything's in motion. There's almost always a real estate event following a divorce. There's money appearing in accounts that people have no idea what they're doing with. Your life insurance changes, your estate plan has to be completely revamped. And, very often it's at a time when people are at their most sensitive, perhaps least focused, and they need someone very objective to help them. And finally, with the foreign nationals, I mean, that's just people who've arrived here and don't even know what a IRA is or a 401k or anything else, and just have a huge necessary learning curve about how to be here. So yes, it goes way beyond telling people, what asset allocation they need in an IRA or something like that.
Right. Yeah. Especially, so that last part you're talking about with foreign nationals, I can imagine, somebody that, immigrates here and they're not aware, of our tax laws. They're not aware of what options they have, of how they can save their money and invest their money. So having that extra push that you can help give them is probably very helpful, especially for someone who just arrived here.
Yeah, I have a service where I have a consultation with them, and we talk about exactly that. I mean, their first day at work, they have to fill out a form that says, contribute to your 401k. They don't even know what a 401k is. A lot of it is just awareness raising, and here's how a 401k works, and you can or you can't contribute to an IRA. And if you go and retire back in your own country, can I take money out of my 401k while I'm in there? These kind of questions. And your normal financial planner is not gonna really be in a position to answer that.
Yeah, so that's great that you found a good spot, a good niche to be in, especially in such a competitive market, being up there in Manhattan. So awesome. Speaking of being in Manhattan, right now I'm also from New York, so I'm a little jealous that you're there in New York and you get to enjoy the good bagels.
You're in Hawaii and you're jealous of me.
Well, I'm jealous. I'm jealous of the food. Okay, let me be clear.
Okay.
But the food here in Hawaii is great. They just, we don't have pizza and bagels like they have back in New York on the East Coast. So I'll leave it at that. But yeah, so being in Manhattan, what have you seen that's changed since the pandemic started? Or better yet, how have people's investing principles changed during the pandemic?
I think back in February and March, when the market suffered a severe shock, and we saw, one of the fastest, nastiest falls we've ever seen. And there was a general sense of despair about where everything was heading, including the stock market, including people's investments, including people's ability to earn a living. I think it was a very, very, very scary time. And even though the market did recover in equally record-setting ways, I'd say the first few months was people were in shock. So their first thought was not to come to a financial planner. Their first thought was really just trying to handle all this. But round about June, I would say, as the initial shock sort of wore off a little bit, I started getting a lot more calls. And the questions were not so much, where can I invest my money? What I'm looking to achieve this goal or that goal. The questions were really just around what can I do to protect what I have? So the mindset shifted from trying to build on what they have to protect what they have. And I think I was offering advice in July and August that was very, very different from end of 2019. And what I was essentially telling people was, given the complete lack of clarity about the extent of this emergency situation, you need as much cash as possible. And if that means taking a bit of a break from investing in the stock market, then so be it. But you need and it depends, to an extent on what they do for a living, how secure their jobs are. But my general advice to people was almost like a barbell. I need them to hoard as much cash as they can, and we can redeploy that later when the situation gets better. And if they are going to invest, then they should invest in the extreme long-term time horizon where the exposure to stocks is at its highest. So we had the stock market down 30%. I was telling people, exclusively for 401k and IRA and retirement money, yes, keep on buying, please keep on buying, but hoard some cash. So basically, I moved away from all that middle ground. If I was dealing with a 25-year-old, I needed them to think about what they, getting as much cash as possible. And then if they were going to invested in stuff that's 4 decades away from being tapped into. And let's forget about everything in between for the time being. And we can come back to that later. So that was generally the advice throughout most of the year. But then, of course, the market not only got back to where it had been, but it exceeded it. I think the other thing was people started to become a little more aware of their own mortality. Talking to people in their 20s and 30s about estate planning it's not an easy sell all the time to tell people of that age that they need to start thinking about estate planning and possibly life insurance if needed. But I think once this emergency situation came around, the pandemic came around, I think people are a little more willing to think about things like that. I noticed a significant amount more clients wanting to have money to help parents out. This sandwich generation of, bringing up kids and looking after parents, that was almost an inevitable outcome. I think people just were so shocked by so much that happened in 2020 that their propensity to look for a third-party professional, to look for help, to say, I know what I don't know, and go and find a professional, I think it increased. So I'd say the last part of the year, I was getting more requests for help than ever before. So I would say that's sort of a brief story of how 2020 went. It's still an ongoing situation. We still don't have clarity. I still want clients to have cash. I'm still prepared to forego some medium-term investment in order to have cash. I don't want them tying money up in illiquid assets. I've talked a few clients out of buying property in this environment just because, don't hurry and do it during this situation. There's plenty of time to do that later. Have the cash available and cash on hand.
Let's take a brief moment to hear from our show sponsors. What's going on, Average Joes? We know that managing one account or your entire family's portfolio can be stressful and time-consuming. From building and maintaining spreadsheets, calculating how many new shares and units you need to purchase with your contributions, finding the time to log into your brokerage and make those trades, and annually rebalancing each account. Well, my friends over at Passive came up with a tool that can help you manage all of this in a fraction of time without spreadsheets and manual calculations. Passive is a portfolio management tool that makes it easier for DIY investors to maintain a balanced portfolio and build a passive investment strategy at their online broker. It eliminates the need to use spreadsheets, saves you from having to log into your broker to place trades, and helps you stick to your portfolio's target allocation. Elite users can save even more time by using the one-click trades feature and having Passive execute the required trades on your behalf. All of this can be done from the Passive dashboard for all of your accounts. No more logging in to multiple brokerage accounts. Passive is not a robo-advisor. It won't tell you what you should invest in, so you'll need to decide that for yourself, either through self-education or alongside a financial advisor. To learn more about Passive or to sign up, check out our link below, www.averagejoefinances.com/passive. That's PASSIV with no E. Again, PASSIV with no E. Check them out. Hey everybody, how's it going? This is Mike Cav with Average Joe Finances. You know, we're living in some pretty tough times right now, and if you don't have life insurance, you should probably get it. You need to protect yourself, protect your family, and protect what you own. Check out the link below in the show notes or in the video description. Let's get back to today's episode. That's how you've talked with your clients about changing up their investment strategy, and their own personal finances. Have things changed for you with how you operate your business as a financial planner?
There've been some logistical changes. I used to work at a WeWork property in Manhattan, and now I've had to convert to a home office environment. I used to meet with clients if they were local in New York. I can work with clients anywhere, but if they were in New York, I would actually meet with them at my work, and we would hold meetings there. Obviously, that's not going on anymore. But I would say also, I've learned from this situation as well. I've learned not to be as definite on my views on things as perhaps I was a year ago. I think I've learned to be a little bit more flexible. I think this 2020's humbled a lot of us in terms of what we thought, how we thought things should be. And I had my list of, I had a world vision, a financial vision of the way clients should work with their money. And I would say over the course of the year that has shifted somewhat. I think I've certainly become a lot more flexible, a lot less dogmatic about what I'm advising to clients, just because it's a reminder to us all that we just have no idea what can happen.
Yeah, absolutely. I mean, things can change in an instant, right? I mean, one day we could sit here, everything's all happy and glad, and next thing you know, there's a worldwide pandemic happening and the market's tanking. So,
Yeah.
perfect example, 2020. So, 2020, I think, was a good example for all of us. A good, like you said, humbling moment for everybody to sit back and reflect on, what's really important in life, and what are we actually doing to secure our future? Because you never know what can happen. I mean, this really feels like a fluke of a year. At least in my lifetime, this is one of the craziest things I've ever seen for at least for something that's a worldwide pandemic. I mean, even when we had Ebola and the swine flu and all that, nothing was as detrimental to the entire world economy than what I've seen with this pandemic. So it's definitely been an eye-opening experience, I think, for all of us. So, very interesting stuff, especially with the particular niche that you focus on. It's really awesome. And again, like I said, I'm a little bit jealous that you're in New York and you get to enjoy those pizza and bagels. But I do enjoy the warmth and the endless summer that we have here in Hawaii. So, I wanted to ask you something, because you said here in your bio that I have that you spent 25 years, right, in institutional currency and equity derivatives trading, right? So going from that type of environment for over 25 years to what you do now as a financial planner, how has that changed, your lifestyle?
It's allowed me to have a lifestyle. During those years when I was in my 20s, I started out in London and came to New York. For someone single in their 20s, it was great. I was out eating at restaurants I'd never be able to afford to eat, and the company was paying the bill, and we were going out 4 nights a week, and days were dynamic and exciting, and it was a very, very dynamic lifestyle with a lot of perks. So, I'll go to Yankee games whenever I feel like it, go watch the New York Rangers, whatever it may be, because back then the whole thing was to deal with, our clients were traders at the major banks, but it was stressful. We'd start at 6:30, 7 in the morning, we wouldn't finish till 5, and then we're going out to dinner, and I'm rolling back into my apartment at the time at 1 a.m., then getting up at 5:30. Very exciting when you're in your 20s, a little more demanding when you're in your 30s, and by the time you get to your 40s, it's like, oh my God, I don't want to do this anymore. When the coincidence between 2008 coming along and me just getting totally burned out, the switch from that lifestyle and that inability to have much of a life to running my own practice and working at the pace and at the times that suit me has been great. I actually work more hours now doing this than I did when I was on Wall Street. If you take the evenings out, I work a lot. I haven't cut back on the hours, but I have complete control over those hours, almost complete control. So that side of things is good. If I want to take an afternoon off, I can do it. I don't do it very often, but it's just nice to know that it's there. Running your own business is frustrating as hell, scary, but it is wonderful too.
It's funny because when you put it that way, and I compare it to what I'm doing right now, right? Being in the military, when you're young and you first join everything and you're doing all this fun stuff and, very physically active during, at work. And then, after work, like everyone's going out and having a good time, staying out late, waking up early again, doing it all over again. And then, you get into your 30s and that starts to wane down. And now I'm getting into my late 30s. And I'm getting close to retirement from the Navy. And I got my real estate license, and that's what I'm going to do when I get out of the Navy. I'm already doing it now, but now at that point I'm setting my own schedule and, doing my own thing and probably going to work more hours than I did while I was in the military. But the fact that I know that I can take a day off if I need to, like that's there, and we can go, have a little bit more of a relaxed lifestyle, even though it's more work, it would be a little bit less stressful. At least I think, in my opinion, right now. I don't know, because I haven't gotten there yet, but it's funny because I'm comparing, your situation to how you did it, which is a completely different, job set and everything. But just the way you described it reminded me of my younger years in the military. And it's like, it's just, for me, it was just a fun comparison in my head. But separately from that, so there's a question I like to ask everybody about their specific field with what they're doing. And so for you, I'm going to ask you this twice. Okay. So for the first one, with your first career field, right, where you were doing the 25 years as a trader, right, or working with the traders, right? What did you enjoy the most about that? And then, of course, secondly, with what you're doing right now as a certified financial planner, what do you enjoy the most about that?
I think for the first 10 years that I was on the Wall Street and the trading side of things, it was the adrenaline. I loved the adrenaline. It was, you come in every day, things would happen, the market would fly around. There was a lot of stress, but I didn't really view it as stress at the time. It was very exciting. And the reason when we did go out, we'd stay out late was because, it was releasing that adrenaline from the day. And I really enjoyed that, and getting well paid to do it. I guess in my 30s, the adrenaline rush wore off to some degree, but I simply enjoyed the money. I would say it was very well paid at that time. And then as a certified financial planner with my own practice, I enjoy one of the things that I did absolutely not do in the first part of my career was have any sense of accomplishment in what I did. I mean, we were just moving $500 million from UBS to Merrill Lynch and getting paid to do it. And then we'll do it again. And then we'll do it again. No real accomplishment. But when you're sitting down opposite somebody, or as we used to sit down opposite somebody, now it's talking to them on a screen, and you, to some extent, hold in your hands their future, or their ability to manage their own future. The difference you can make, to use it in its real word, the awesomeness of it, in its real sense, the awesomeness of the feeling is very, that's very exciting too, that I can actually make difference in the lives of a couple, their children, their parents, and that's very exciting. So I get a whole different set of, I mean, I do get a little adrenaline rush. It's very different from the trading one, but the ability to make a difference in someone's life. And we're not talking about, making somebody who's got $50 million net worth raised to 75 million. We're not talking about that. I wouldn't particularly regard that as a huge accomplishment. But dealing with somebody who's, unsure if they can get the kid to the college they want, unsure what happens now that they've got married, not what will happen if they lose their job, that sort of stuff. So it's a different type of adrenaline.
Yeah. So it's that, I guess, like that sense of purpose, that sense of service, right? And that gratitude that you get from it, especially when you get a client that you literally change their life. And that's just something that's amazing. So I do financial coaching on the side, and I've actually helped a couple folks get themselves out of debt. And then, when I'm kind of done getting them there, I send them, I said, hey, you got to go sit down with a financial advisor now and go figure out what you're going to do with your money. Because now that you don't have this debt to pay off, you got to figure out what to do with all that. Seeing like the difference you can make in someone's life in that regard is just absolutely fantastic. Absolutely amazing. And I think that's why I chose to become a real estate agent when I get out of the Navy, is because I want to continue that service, right? I want to be able to continue to serve others and help them get to a better point in their life. And it's really exciting stuff. And I definitely appreciate you taking the time to talk to us about that. I mean, what you're doing is awesome. Starting up your own business and can be very dangerous in New York, right? To start up your own business, and but you've done it and you survived and you thrived, and you're doing awesome things and you're changing lives. So I want to ask you one more thing, and that is, where can people find more information about you? Do you have a website or social media that you can share with our listeners?
I'm not super active on social media. There's actually a number of restrictions we have as registered investment advisors about being on social media. We've got to be a little bit careful about testimonials and endorsements and all that sort of stuff. So I am not particularly active. By far the easiest way is at my website, which is angliaadvisors.com, ANGLIA advisors.com. All my contact details are up there, all the different types of services I offer, all my fees are up there. I'm very transparent about what it costs to work with me. So I would, if anybody wants to find out more about what it is I do, just go to angliaadvisors.com and click around. Everything's up there. And I'll even throw this podcast up there. I have a list of media room, as I call it, I think.
Yeah, fantastic. And I'll make sure that we have all of your links and everything, at least the link to your website, and we'll have all that in the show notes to make it easier for everybody to just copy and paste or just click away, and it'll be easy, a little bit easier than just trying to type it out. So, hey,
thanks, Mike.
Again, Simon, absolute pleasure having you on. Thank you for taking the time today to talk with us.
I really appreciate the opportunity to do so, and keep up the good work.